Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for August 21st, 2022. I hope you guys and gals are having a great weekend. We have a jammed packed week next week. Why? Well, we got the Jackson Hole Symposium. It's going to be busy. It's going to be volatile. And I know some of you are just trying to enjoy your holiday, but guess what? It's going to be a busy one, and I'm looking forward to it. I hope you are too. We've got a lot to talk about today. We're going to talk about not only the Jackson Hole Symposium, but this really strong dollar rally we got at the end of the week. We're also going to talk about the PMIs coming out in Europe. We have durable goods orders in the U.S. We have GDP numbers all over the place. We have some inflation data even out of South Africa. And I believe in Mexico too. So there's a lot going on and a lot of charts to look at. And the stock market is starting to look a little peaky here. So with that being said, let's get into the markets and let's start off with the dollar. You know, have you ever had one of those weeks where you should have stopped trading on Wednesday? That's how I felt this last week. I was having a great week. I was short the euro, made some money. I actually made some really good money. You guys have been watching the week ahead videos for the last 2 weeks. I've been shorting the euro as we were up here at 103.50. It was a great trade. I really, banked on that one. And then thought I'd get a little cute. And in about midweek, the dollar continued to go higher. The euro continued to drop towards parity. And it dropped about another 100 pips from where I covered it. And yeah, I didn't trade that one also well. So it's like, man, I wish I would have just stopped trading on Wednesday. But the fact of the matter is we had very low liquidity and the dollar just continued to rally. Now, keeping in mind what's happening this next week with Jackson Hole. Now, I'm going to take a step back for a second, and I want to just discuss. And let me go ahead and pull up Forex Analytics here. For those of you that haven't tried it out, make sure you try it out. It's only $1 for 10 days. But I want to talk to you about some pretty key developments in the market. And as you can see, the euro just ripped right through this. This is a 618 retracement at the 107.50. We got up above. You can see right up here above 108. All right. Now, going into this next week, I think the market is expecting the Fed just to retain a hawkish stance. Anybody you talk to really feels that way. Now, my friend Mark Chandler from Bannockburn, he put out a tweet this morning and he said, hey, I think we're going to get the buy the rumor, sell the news. They're going to interpret Jerome Powell's comments as being dovish. The market will and market participants will nitpick his comments, but I really kind of think that is the possibility. Whenever you get a strong move into a key event, like we know next week is it's the semi-quasi Fed meeting. I mean, even though it's not a Fed meeting, we're going to hear from a lot of the Fed governors. And a lot of people expect the Fed just to continue to give us a hawkish rhetoric, which I don't disagree with. But the market's expecting it. And you can see it really transmitted through the dollar this week. The dollar continued to blast through Thursday and Friday. And you can see we're pushing up against 161% extension, right, of this last move lower, 78% retracement of this whole entire, move from July. There's a chance we could actually go a little bit higher than that, in my opinion, as we go into this week. However, remember, the market's going to hear what it wants to hear. So if the market interprets what Jerome Powell has to say as somewhat dovish, we could actually see a lower high get put in the dollar index as early as this week. Now, you're probably wondering, well, Blake, what are you seeing that could suggest that? Well, I'm going to take you over to the euro dollar, which happens to be the most, in the dollar index calculations, it's over 50% of it. So the euro is obviously going to be a very key component. Gosh, I'm lost for words this morning. Remember, it's the weekend for me too. All right, not just for you. It's the weekend for me too. So sometimes my words don't come out as well as they should on a Saturday morning, especially after having a beer or two. Anyway, I want to take you over to the euro and more of an intraday chart. This is a 4-hour chart. By the way, if you're following along via Forex Analytics, just remember I update all the analysis throughout the course of the week at the end of the day for the basic technical analysis. And you can see this flag pattern right here. we're going to talk about that because it is important. All right. And just so you guys know, guys and gals know that, yeah, there's 30 instruments here. I do the basic technical analysis at the end of the day, every day. Me personally, this is all, it's all analysis done by our team. It's not some algorithmic thing. This is, Andre Cardozo's harmonic patterns, Gregor Horvat's Elliott wave counts. All right. So I'm going to take us back over to the euro, and I want to show you, and I'm going to draw for you this bear flag pattern. Now you'll notice that the bear flag pattern is pretty, it's a solid one. It's an obvious continuation pattern. But where does it extend to, and where does it complete? Well, it completes right at the lows. So, and maybe even just shy of the lows. Whenever we see a pattern, if it gets somewhere close to it, remember, horseshoes, hand grenades, and technical analysis, it works. Close is good enough. In technical analysis, close is good in hand grenades, and close is good in horseshoes. Always remember that. So, even if we post not even a lower low, but maybe close to those lows and don't put in a brand new low below parity, that I think is the risk this week. And if the euro doesn't create a new low and we can bounce from there, not only are people going to start thinking a double bottom, in the euro, but also we'll start thinking, well, maybe once again, you throw all this news at the Eurozone, bad news at the Eurozone, even good news for the U.S. Interest rate differentials continue to widen and the euro can't sustain a break below parity. If that becomes the case and that becomes a thought process, there is a risk that we do bounce. Now, I can't get bullish the euro until we get back above this black trend line. You can see this black trend line has been very, 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 very well behaved and it's very much contained in keeping the euro dollar behaved with a downtrend. Now, if we get above that black line, that's where the bullish tune could really take hold. Now, I know there's probably a lot of things that need to happen in order for that to happen, but there's some things that we should be thinking about as we go into this next week, especially with the Jackson Hole Symposium. Now, it's not just the euro that's under pressure. Let's take a look at the sterling. The sterling is on its way towards the recent lows, and some analysts believe that we can trade down towards 116. And I don't see that as being entirely impossible. If you take this last range and you just put an extension on it, you'll notice that with an extension, we could trade down to 116.30, 116.50 pretty easily and still be within a downtrend, but also, get a counter trend rally from down there. That is entirely possible. Now, one of my favorite currencies, as you all know, to trade, especially at these levels, is the Aussie dollar. Now, we talked about the Aussie last week. If you went to the week ahead video, you knew the 200-day moving average was going to be a real stickler. It did reverse, and it reversed pretty aggressively alongside stocks. Now, I am going to get into the stock market, so just make sure you stand by. And by the way, if you're liking this content right now, make sure you give us the thumbs up. Subscribe to the channel down below. Don't miss any of our content that we post throughout the course of the week. And make sure you join the free face show every single day. If you want my analysis throughout the course of the day updated, and not only mine, but the rest of the team of the Forex Analytics team, we got a pretty stout team. If you want to see, who's involved in Forex Analytics analysis that brings it to you every single day, check out the Forex Analytics team. Anyway, what I was going to say is, if you want my updated analysis instead of just listening to it from Sunday to Sunday or Saturday to Saturday or whatever day you're actually watching this, make sure you log in. It's free. It's every day. Why not? You can get to it right at the link at the bottom of this. If you're watching us on YouTube, you can get down there to the link in the description or through our website. Just go to where it says webinars. These are our free shows that we do, the Flow Show and the Face Show. Okay, getting back to currencies. Now, like I said, the Aussie dollar has actually been performing better than the euro and a lot of different currencies, over the course of the last, I would say, really over the last several months. However, the Aussie dollar is coming into what I consider a pretty strong buy zone. Now, you'll notice that it is under pressure. We got divergent relative strength. And my suspicion is that we are going to find some sort of support down here around the low 68 cent level. That's what I'm personally looking for for some sort of support. Now, that doesn't mean we're going to necessarily get it, but that's what I'm looking for. I'm looking for a long-term inverted head and shoulder pattern to develop. Now, when I say long-term inverted head and shoulder pattern, you're probably like, oh, well, Blake, you're really trying to anticipate this move. It's not just that move, folks. Go over to the weekly chart, and you'll notice a long-term inverted head and shoulder pattern really developing on the Aussie dollar. Now, this could, take us even a little bit further than what we see down here at the 66.70 level, which is entirely possible, especially with the stock market showing some signs of weakness. However, I am going to be looking this week and seeing if the Aussie can find some support between the 68.50 and maybe 68.20, 68 cent level, and seeing if it'll hold. I don't know if I'm brave enough to get in front of it just yet, but that is what I'm looking for this week, and maybe for a possible reversal from here. So just keep that in mind. And by the way, if you're looking for like what kind of Australian data is coming out this week, really nothing. There's some minor data, but nothing that's really jumping out at me as far as the calendar goes. There are a few other things that I do want to look at. I want to take a look at the dollar Mexican peso. You want to talk about an emerging market currency that has really been very strong, even in the current environment, as stocks have been, pulling back a little bit over the course of the last, several months. You can call it. The dollar Mexican peso has been pretty steady. And with this recent bounce that we saw in risk, it did kind of allow the Mexican peso to reverse a little bit. You can see the dollar Mexican peso just kind of showed a little bit of weakness. But look, if we see the stock market continue to be relatively strong at current levels, we might actually see this dollar Mexican peso reverse here. But the one other thing that I do want to point out regarding the dollar Mexican peso is it does have a really big base. So in the event that we see some stock market weakness, that could really, get this dollar Mexican peso from here. It could get the dollar Mexican peso back up to 21, or, somewhere in this neighborhood. That is if the stock market shows some weakness. Now, I am going to take you over to the stock market, but before I do that, I want to take you into this is the sponsor of this week's show. It is the Trader Funding Program. If you want to learn how to trade our money and not your own money, but you don't want to take any of the risk, then check out the Trader Funding Program. This is how you can access larger amounts of capital. You may not want to trade your own money. You may have $100,000, $200,000 set aside to trade, and you're like, man, I don't want to really risk that. Well, fine, risk ours, and then you keep 75% of the returns. You don't take any of the risk. If you want to learn how to take an assessment to see if you can qualify to trade our funds, watch this little video down here. It's a 2-minute video at the very bottom of the Trader Funding Program site. Check it out. Why not? That's a free 2-minute video that might actually change the way that you do things in the market. So check out the Trader Funding Program. Okay, let's get into the stock market because I think this is pretty important. We've seen stocks, and we talked about it last week, how important this 200-day moving average. I can't express to you guys and gals how important these levels are. And I'm gonna pull up some pretty key levels. We're gonna do a little bit of drawing here because we did discuss this on last week's week ahead video and how important all of this was. And we ended up rejecting the 200-day moving average almost to the pip. But we have not only a 200-day moving average, we have channel resistance. We have the 127% extension of the last leg lower came in, just around 43.30. We have the 618 Fibonacci retracement of the all-time high to the 2022 lows. That came in just a little bit above that at 43.70. We have just so much massive resistance here. And now the market's starting to realize that, hey, we've gone a long way and the Fed's going to be hawkish. But how about if the Fed is not hawkish? How about if the market does interpret the Fed as being a little bit more dovish? How about if they look at Jerome Powell and say, yeah, I expected him to be a hawk. He was pretty hawkish, but he wasn't as hawkish as I thought he'd be. I'm going to go ahead and just remove a couple of things really quick, and I'm going to put them back as soon as I'm done. So I'm going to remove this. Whoops, that I didn't want to do. I'm going to remove that. I'm going to remove that. I'm going to take this. I'm going to delete that. Okay. And I'm going to say that the S&P still has some unfinished business right up here at this confluence of resistance that is just above the most recent highs. So wouldn't it be something in the market if you saw this happen with a more, let me just rephrase that, less hawkish than expected. He's going to be a hawk, but maybe not as much of a hawk. And let's say my friend Mark Chandler from Bannockburn is correct, which I don't disagree with him. Wouldn't it be something if we rallied here from this support down here this week and got to this unfinished business up here at the 618 retracement and then reversed? Talk about screwing the entire market. I mean, the market is very efficient at catching people wrong-footed. Ask me about Wednesday and me trading the dollar. Case in point. The market's really good about catching the majority of the market wrong-footed. Right now, I've been reading, and over the last couple of days, I think there was an article in the Wall Street Journal how short sellers are starting to step back into the market. Everybody's bearish. It's been a big wall of worry. The market's going to roll over. We got quantitative tightening starting in September, or more aggressive quantitative tightening. There's a multitude of reasons why the stock market should be going lower, and I think the market is now starting to really believe that. Well, how about if the market's leaning into shorts, and then all of a sudden, as the market leans into the short side at the end of the week, they see Jerome Powell is not quite being as hawkish, and maybe we get a rally past the 200-day moving average to the unfinished business at the 618 retracement around 43.70 to 43.80. See, I think that's a real possibility. Now, that doesn't necessarily mean that I'm going to buy the stock market this week in anticipation of. However, what I will be looking to do, let me delete some of this here. What I will be looking to do is actually sell some risk on a rally at the 618 should we see there. Now, what's going to change my mind and say, you know what, Jerome Powell is extremely hawkish and the Fed is going to, stay balls to the wall and continue to raise rates at a more rapid pace because they're really out to tame inflation? Well, in my opinion, a break below 4,200 in the S&P is going to suggest that we are heading, lower going into this fall more sooner rather than later. Okay. A couple other things I want to point out regarding the markets this week. I want to take a look at gold. I want to take a look at the crypto market because gold is a little bit concerning to me. If you look at gold, we did reject the 618 retracement. We actually broke this channel. Oops, let me go ahead and grab a different trend line here. We broke this channel, and many of you knew that this channel was in existence. We broke it. We rejected the 618 retracement. Gold looks like, we're heading back down towards support. That's something that, if gold continues to break down towards 1680 or 1700, that's just going to fuel the fan of dollar bulls. Just keep that in mind if you're out there trading the dollar. Now, the other thing that I wanted to keep in mind is I want you to take a look at Bitcoin, and I wanted you to take a look at Ethereum. We talked about this last week, how, the market was pretty bulled up on Ethereum because of the merge coming next week, and Bitcoin's actually been holding up, below 25,000, which is a big deal. But it just been kind of bouncing around this ascending channel. Well, we actually ended up having an ascending wedge and we broke down. And Bitcoin does look bearish now. And you look at Ethereum, the Ethereum market came out of an ascending wedge. But check this out. Did you know that if you take the high from April, then to the most recent low, the 38% retracement comes in around 1900. And we also had previous support acted as current resistance. Ethereum actually technically reversed right where it should. One thing I do love about the crypto market from a trading perspective is it's very natural. Less algorithms, less bots than any other market out there. So it's very human. It's very technical, even at this point. So knowing that Ethereum was at really key resistance weighed on the market today. This is a very good case of everybody who was buying the rumor. Well, hell, the news doesn't even come out for another 3 weeks. So you're seeing Ethereum already get ahead of that. So it's really important to realize that where these cryptos are at. Is there some downside left? Maybe, but I think they're going to be more of a risk proxy on what happens with equities. So we're just going to have to keep an eye on the equity market and see how that transpires later this week. But remember, this week is going to be a very busy week. Not only do we have Jackson Hole, that really kicks off on Thursday, the 25th, and it's going to go Thursday, Friday, Saturday. You're going to see a lot of headlines, a lot of Fed chairmen, a lot of governors, You're going to see a lot of central bankers, a lot of, the cream of the crop financial folks. You're going to hear from them, the likes of Jamie Dimon and other CEOs from big banks. So a lot of the financial leaders are going to be talking. You're going to hear a lot of headlines, and they will and could move the market. But we do have other data too this week. So like I said, we have inflation data out of Mexico. If you're thinking about the emerging market space, we also have out of South Africa. We have inflation data out of South Africa as well. We have unemployment out of South Africa. We also have out of Mexico. We have GDP data, and we have, like I said, we have inflation data coming out of Mexico this week as well. Now, as far as Europe goes, we have out of the Eurozone, we have PMIs, we have durable goods orders out of the US. So we're going to keep an eye on that when those come out, especially that's going to be on Wednesday. We have the German IFO. I believe some German finance ministers talked about the real dire, economic. I'm lost of words this morning, but and I'm paraphrasing here. They just talked about the dire economic conditions in Germany right now, and especially with what's happening with the energy crisis, not only in Germany but the rest of Europe and the UK. That's something we really got to pay attention to going into this next week. But guys and gals, I want to say thank you all for joining me this week. Make sure you try out Forex Analytics. It's only $1 for 10 days. Try it out. Come join the most active trading community in the markets. You can, talk to me, talk to other members of our community, other team members from Forex Analytics. And if you spent this time with me, I want to thank you for spending your very valuable time with me this week. And I'll see you Monday morning on the Face Show. My name is Blake Morrow. Talk to you then. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.